All right, back at 39 minutes after. Now, the FDIC wants to tighten rules for private equity firms to buy banks, and they've just crossed, or I should say, just some headlines have crossed the Bloomberg terminal. In fact, saying this coming from the FDIC, saying investors have a 3-year hold on lenders that they do buy, that they must pledge to pay the FDIC losses on cross guarantees. They're also saying that the buyout firms must be well capitalized for 3 years. Again, this comes into the interest by those buyout firms in buying those financials. Do you want to bring in Bloomberg News' Jonathan Keener, who's got more on this story, has been following this for Bloomberg. So, Jonathan, we're trying to make sense of these headlines. What's your take so far? Is this pretty much what was expected?
This was largely expected so far. Again, all eyes in the buyout community on the FDIC today. The board meeting started at 11:30. We were expecting headlines to come right after that, which we now have on the terminal. So far, it sounds like the guidance they're giving is what we'd predicted. The one big unknown is the source of strength issue.
Tell us what this is, the source of strength doctrine. And this is something the buyout firms have been watching very closely.
Very carefully. This makes or breaks these deals for buyout firms. Just to step back, buying failed banks from the FDIC is a very hot sector right now. Bank United was purchased in May by Carlyle, Blackstone, a bunch of other big private equity firms. So they're all really keenly focused on this. Source of strength essentially makes a private equity firm be obligated for future recapitalizations of the bank. Essentially makes it impossible for them to tell how expensive this project might be, how costly it might be to their other funds down the line. So that wording will be very, very carefully watched.
So based on what we're seeing so far in terms of what the FDIC is issuing in guidelines, should we expect that buyout firms are going to be even more aggressive in picking up financials?
I would say the opposite. I think the clarity will certainly help them. I think the guidelines are very helpful as far as knowing what they can and can't do. But if this source of strength issue is what it appears to be, if they're going to be on the hook for future obligations to the banks, then they may be more wary of these deals.
And Jonathan, does this open the door for investors now to buy failed banks? Is that what's going on here?
It opens the door in the sense that it provides clarity. There's been a lot of so-called concern about so-called political risk, which is concern that the regulators may wind up changing the rules down the line. This is an attempt to get away from that concern. On the other hand, it does put the private equity firms, so to speak, on the hook for more losses for these banks.
And the regulators are worried about these buyout firms kind of buying, flipping, making quick buck. I mean, this is why
they're very
concerns.
worried. One of the things that you mentioned was an anti-flipping measure. I believe it's a 3-year period during which the private equity firms won't be able to so-called flip the bank the way that you might flip a house during the real estate boom. So that's an attempt to get away from short-term gains.
Bottom line, you know, everybody's kind of looking to kind of get some of these financial assets moving. Is this potentially going to slow down kind of the recovery in financials as a result?
I think it will perhaps slow it down a little bit, but I think the deals that get done, everyone will feel a lot better about. The fact that the FDIC is giving these guidelines, clearly they've been in touch with some of the congressional watchdogs like Senator Jack Reed. The Obama administration's white paper last month made mention of this. So I think you can look at this as sort of a little more unity between the regulators.
Right, and this isn't final, right? There still has to be some public comment.
This is not at all final. That's correct. This is being debated right now by the board. There will then be, the rules will, my understanding is, be effective as of today, but there will be a period when outsiders can post comments and they can be reevaluated. So this certainly isn't final.
All right, terrific. Jonathan, thank you so much.
Thank
Bloomberg
you.
News' Jonathan Keener.